Welcome. It's Thursday. It actually is Thursday. I know in quarantine, every day feels like it's all one long day, but it is actually Thursday. We're happy to have you guys here for our education event, all about the CARES Act, and we hope that you can help learn something that applies to you and your individual needs at this time with your retirement accounts. We've got Bill and Daniel with us today, and I'm going to turn the time over to Daniel to get us started here in just a minute. But before we do, let me go over some housekeeping items. To your right, you'll see there's a chat box, and if you click on chat, you'll be able to type in your comments. You can either choose to send your comment to everybody, or you can send it to the administrator. We want to encourage questions, but just know that this time in our event, we're not going to answer them live. Well, like when you write it, we're not going to answer it right away, but we will address all the questions at the end of the pre-scheduled seminar. So now I'm going to turn the time over to Daniel.
All right. Thank you, Shana. I hope everyone's having a good morning. Let me get this set up here. All right. So this morning we're going to be talking about the CARES Act and what that means to you. This is a big deal. It's a very expensive act that's been passed in both houses of Congress, and we're going to just talk for a few minutes about the impact it means to you, and if you have a small business or if you have the need to withdraw funds from an investment account, and the different tax implications that may entail. We're going to encourage anyone that doesn't have an income plan also to consider having an online meeting with us. If you have any questions about that, and if you don't have an income plan, you're going to have the opportunity to schedule an appointment with Bill and myself. So first of all, those of you that don't know us, we're Security First Asset Management. We've been in business over 20 years. And the reason we do what we do is we believe people should plan to thrive, not just survive through all stages of life. We have a Great Depression mentality, which basically means we think that you should think about how safe your principal is, especially where you're taking your income from. So preservation of capital first, return on capital as a second priority. So Will Rogers, as you know, said, in retirement, I'm more concerned with the return of my principal rather than a return on my principal. And we're an independently owned firm, so we don't have anybody telling us how we need to invest people's money. We do it specific to your needs. We clear through Pershing, which is one of the world's largest clearing firms, and they custody our assets for us. So we are able to help people differently than some of the other brokerage houses, and they're more limited in many cases than we are. So this is a picture of our staff and advisors, and you can check us out on the Better Business Bureau, National Ethics Bureau, or at designationcheck.com. Bill and I are both retirement income certified professionals. So let's talk about the CARES Act, what it means for you. First of all, CARES Act stands for the Coronavirus Aid, Relief, and Economic Security Act. It's a mouthful. So that's what the acronym means, the CARES Act. So let's talk a few minutes. This is kind of the agenda of what we're going to be doing this morning. The Coronavirus Aid, Relief, Economic Recovery Act, it's applicable to individuals and companies. And there's a lot of key provisions that will possibly mean quite a lot to you and may help you if you're impacted by the coronavirus. Those things include recovery rebates, cash payments, unemployment benefits, coronavirus-related distributions. As many of you know, required minimum distributions are waived for 2020, meaning you do not have to take them if you don't need them, and that can provide some tax planning opportunities for you. There's been a change to the 5-year rule when you distribute an account after the death of the original owner, the 5-year distribution rule. And there's been some changes to the qualified charitable contributions. We also have some student loan payment deferral changes and small business benefits. So we're going to touch on a lot of these this morning. At the end, we're going to give you the opportunity to ask us any questions you may have. So specific for your retirement, we're going to be talking about coronavirus-related distributions from your accounts. There's also been some enhancements to loans, some very advantageous things if you're impacted by this, where you're able to take loans out of your employer-sponsored plans and spread some of the taxation out. And as I mentioned, required minimum distribution changes for 2020. Pretty much all of this is applicable in this tax year, 2020. So let's get right into it. The coronavirus related distributions. So this is the criteria. If you need to take a distribution from a 401k or employer-sponsored plan or an IRA, you can distribute up to $100,000 from your plan. There's certain qualifications. This only applies to people if you've been diagnosed with COVID-19 or have a spouse or dependent who's been diagnosed with it. If you have experienced adverse financial consequences of being quarantined, it also applies. So if you're having to work reduced hours because of the disease and you need to take a distribution in order to get by from day to day, you're able to do that and to have some tax benefits because of it. Another criteria is if you're unable to work because of the lack of childcare as a result, if you own a business that has closed or operate under reduced hours because of it. So these are the criteria, and there are some other things that the IRS will have to individually tell you if it's okay, and you'd have to call and ask specifically. But you can distribute up to $100,000 from your IRA, even if you're under the age of 59 and a half, if you've been impacted in those ways. So that may apply to some of you listening. So let's talk briefly about how the taxes may affect you this year. If you're under the age of 59 and a half and you need to take a distribution based on the criteria I just described, you're not going to be subject to that 10% tax penalty if it's for those reasons. But let's say you're not impacted and you just need to take money out to maybe for a down payment on a house or something like that, that won't qualify. You have to fit the criteria in order for the 10% tax penalty to be waived if you're under the age of 59 and a half. As you know, normally you'd have to pay your ordinary income tax and a 10% tax penalty on distributions if you took money out of an IRA prior to 59 and a half. But if it hits the criteria that we just described, if you've been impacted by the coronavirus, or if you're not able to work, or if you childcare have to stay home because of that, then you can get that waived. Another change is out of a 401k, there's no mandatory tax withholding requirement. Typically out of a 401k, 20% is withheld for federal income tax. That is waived during this period of time. And probably the best thing about this is that your income can be spread over 3 years. So if you need to take a withdrawal and it's related to COVID-19, you're not going to have to pay it all in 1 year. You can spread that distribution out. So if you had to take $30,000 out, only $10,000 of it would count for this tax year, $10,000 next year, and $10,000 in 2022. You're eligible to pay back loans if you took a loan as well over 3 years. You can repay that back into it instead of just in 1 year. So those are some really advantageous rules that they've given us if you're impacted by this. So something to consider if you absolutely need to do so. Obviously, you're not going to want to take that out and spend the money if you don't need to, but we know a lot of people that have been impacted and they definitely need to have income in that type of situation. So we have some loans as well. If you take a loan from the 401k or 403b, your maximum loan that you can take out is $100,000. Previously it was $50,000, but 100% of your vested balance can be used, and you can delay making payments during the year 2020. So there's some changes to the 401k and 403b loans. Different than a distribution. You're taking a loan out and you're paying yourself back, versus a distribution, you're just taking the money out and spending it. All right, so now I'm going to turn the time over to Bill, and he's going to continue to talk about the rest of the things on our agenda.
Good afternoon, everyone. It's a pleasure for us to be able to at least visit with you this way. I know we're not hands-on, face-to-face, but thankful that we're learning some technologies that will be beneficial maybe for all of us going forward. I hate to think that we might be going to our doctors like this in the future, although we are now. So we do need personal touch for a lot of things, and hopefully we'll be able to get back to normal pretty soon. Let me talk a little bit for a few moments about the required minimum distribution. Anybody that was 70 and a half prior to last year, or even years prior to that, they already started taking the required minimum distributions. In December of last year, the CARES Act was actually implemented, which allows anybody turning 70 and a half this year, 2020, to delay taking RMDs until age 72. So this is impacting only those folks that are already 70 and a half that were already taking RMDs. So that's been waived. That means you don't have to take any distributions in 2020 for the 2019 distribution. Voluntary distributions are still allowed. So if you want to take money out of your accounts, you're still able to do that. They always like that because they know the taxes are going to be paid on it. So those are fine. Now, if you've already taken it, there are a couple things you can do. If it's been within the last 60 days, you can reconstitute it. The problem with that, there's a challenge. If you had taxes taken out, you'd have to reconstitute it 100%. Meaning if you had 20% taken out, you'd have to find 20% from other resources to put back in hold, and then you get a tax return next year. So not too many people are probably going to jump on that bandwagon, but it is an opportunity to perhaps do that and then look at some conversion opportunities with that money. So there are some things we could do. This is a good time. Anytime we suspend having to take an RMD, if it's appropriate, it may make sense to take a look at a Roth conversion. So that's something to talk about. But it's past 60 days, and actually you can do something, reinvest the money, whatever you need to do. You still can do a charitable donation. The qualified charitable donation still exists, so you are able to take those monies and make that happen. So that's something to consider. The 5-year rule for those folks that inherited an IRA, they have to take the distributions over 5 years. That's now you got a holiday on that, which means you don't have 5 years now. You have 6 years to do so, and that applies to quite a few of our clients who inherited money from their parents, etc. And you may have family members that are also dealing with this. As a matter of fact, as Daniel was talking earlier, the 59 and a half rule, some of the benefits are there. You may have family members that applies to, so you can help them understand that. And if you need further clarification, we'd be happy to help. So at the end of the day, what do you need to know about all of this? Number one, you can access 401k, 403bs, and retirement accounts prior to age 59 and a half, as we've already discussed. Loans, you can take loans against those accounts, which used to be capped at $50,000. Now they're 100%. A vested amount of up to $100,000 in loans, and they don't have to start repayment for next year and the year after. So you can do that. Some of your family and loved ones may need to do that. And thirdly, you don't need to take your required minimum distributions for calendar year 2020. Now, many of you may have already had those things set up automatically. I'd encourage you to call Christy. If you want to suspend it, give her a call, or Elaine, and we'll get you the necessary paperwork to reestablish it, stop it, start it next year, or whatever the case may be, whatever you'd like to do. And if you want to do charitable donations, they're still on the table. So if you want to keep it as it is and take it, that's fine too. If you want to convert it to a Roth, then we need to have more conversations about that. So do you have any concerns? Does any situation apply for any of you with these provisions? And how does the current pandemic affect my current retirement plan? If you have concerns about that, we need to have conversations. What is my risk tolerance, and can I withstand another market loss? Hopefully we understand that individually for you. But you have concerns about that, let's talk about it. Let's make sure you have the peace of mind that you need. How will taxes affect my future and the future of my beneficiaries? My gosh, folks, we can't continue to print money and not have long-term consequences sooner or later. So we need to understand tax implications. We'll be help you with that best we can. I'm worried about income in case of a life change or a forced retirement. I don't know that we have a lot of clients that fit in that category, but again, you may have family, friends, or loved ones that may be forced out. We don't know how this is all going to pan out yet. It's all new territory, so we're completely in the blind about a lot of the future as far as jobs and opportunities that we presently have or don't have. I'm not sure that anybody owns their own business here, but if you do or have loved ones that do, what are your options for yourself or your employees during this period of time? So there are a lot of concerns out there, and we're trying to avail ourselves of as much information as we can so that we can be a resource for you, our clients, and to help you navigate through this difficult time. We're here to help. We'll be happy to have an updated complimentary review anytime you want to. We've been doing a lot of reviews via Zoom online. We can do it over the telephone. We can FaceTime people with iPhones and iPads and things of that nature. And we can review your current situation, make sure you're on track. We want to be available, even though we can't do it on a one-on-one basis. So give us a call, or you can call Miss Pat. You can text us or email us. We have this new direct way where you can actually set up a calendar right on this calendly.com/securityfirst. That's kind of an appointment setting type tool that we're trying to implement during this period of time. So you can do it that way as well. So in any way possible that you can get that, we'll be happy to do that. Now, we're thankful for the opportunity we've had to spend together today. We do have a couple questions. If you have any questions, let's see if we can answer them right now. Let's see. We've got a question here. What do you expect the impact to be on the state pension plans? Well, states can't print money like the government can, so I don't know. There are some states that already are bankrupt with their pension plans, and they're insured to a certain point. All pension plans have some type of insured protection, but if that entity were to become insolvent, that insurance plan is not 100% of the pension plan benefits. It's sometimes reduced. So nobody knows. If that starts happening, we may have trouble all over the place. But
yeah, Georgia's pension plan's pretty well funded compared to other states. The state of Georgia depends on teachers' retirement system and other pension plans. State of Georgia retirement seems to be better funded than some of the other states.
Yeah.
So.
What we need to try to remember, though, even though the government system, if their incomes are impacted, that means the revenue's down. So that could impact services as well. Okay. Any other questions? All right. Well, we thank you for taking time to be with us today, and we wish you well. Thanks very much. I say we got another question. Hang on a second.
Just thank you.
Thank you. You're welcome.
Yeah.
You're welcome.
Thanks,
Thank
guys.
you. Take
Y'all
care.
Have a great day.
Bye-bye.
Says lost your audio because Shane got